Thanks for coming out to March's Mobile Monday Toronto event at Mars. Looks like we have a lot of new faces here, a lot of first-time people here. Maybe a show of hands. Great. A lot of entrepreneurs in the audience. Excellent, excellent. Well, we have a few companies pitching tonight, and we have VCs here from different venture capital companies in the Toronto area. Wanted to give thanks to the Mars team for helping us set up, Andrea and Janet and Peter at the back, and Brad and the AV team, and Jeff and Anna, so thanks very much for that. And I wanted to thank Dal as well. Where's Dal? Dal, give a wave to everyone. Dal really spent a lot of time coordinating the event. So hats off to Dal. Wanted to thank Jolin and MarketWire. He does all our PR, so he's always supportive there. So thank you, Jolin, and to Dane. This is the fourth year we've actually done this venture capital pitch, or Dragon's Den style pitch. Has anyone been to the events before? First two? Okay, Ophir, Jolin, of course. Well, as you probably know, anything can happen. We have some pretty interesting pitches and a lot of good feedback from the audience and also the panel as well. So what we'll do is start off with a panel Q&A. Tom Purves is our moderator, and he'll be moderating the panel, and we'll do first questions with the panel. We'll have audience questions to the panel as well, and we'll also have, we have audience questions, but there's a microphone set up right there, so feel free to come up to the front and ask a question. Then Tom will introduce each of the companies one by one to come up and give a 5 or 6 minute pitch to the panel, and see what the panel thinks. And we'll close off by just networking at the end of the event. So I'll introduce Tom Purves. He's our moderator for tonight. A lot of people know Tom. He's a very well-known blogger and writer. You've probably seen some of the things he's written in the Globe and Mail, the National Post, Ottawa Citizen, IT World, Hamilton Spectator. He's also the co-author of wirelessnorth.ca and startupnorth.ca, and if anyone knows wirelessnorth.ca, it was the resource to kind of go to get the latest on the AWS auction when that happened last year. So he really keeps it up to date, and he has his finger on the pulse of a lot of the issues in telecom, both at the policy level, the industry level, the investment level. He's also very active with Toronto Demo Camp, so you may meet him there sometime. And finally, his background is in engineering, both computer engineering and electrical engineering from Queen's, and he has an MBA from the Rotman School of Management at U of T. So everybody, Tom Purves.
Thanks, everyone. So I'll start by introducing our panel. First up, we have Edward Anderson, and he's a managing general partner of Ventures West, Canadian venture capital management firm with offices in Vancouver, Toronto, Ottawa, and Montreal, the largest institutional fund manager in Canada. He's also president and past director of the Canadian Venture Capital Association and member of board of advisors for a number of investment funds focusing in Africa. Come on up, grab a seat. Next up, Matt Golden of the Blackberry Partners Fund. Blackberry, a small cell phone maker you might have heard of in the Waterloo region. And the Blackberry Fund Matt Golden's job is responsible for investments in companies focused on breakthrough innovations in the mobile and smartphone ecosystem. As I understand, you invest in both BlackBerry and other smartphone platform type companies. Formerly of Tira Wireless and Brightspark. Next up, we have Randall Howard, is one of the founding partners of Verdexus, a technology investor and a serial CEO and technology guru. A couple of Verdexus portfolio companies are Iotum and CoreWorks. He has been active in helping strengthen the business and investment ecosystem for technology by serving on boards of the Golden Triangle, AngelNet, Communitech, Uniforum, Dean's Advisory Council, Laurier Business School, as well as the Mars Wireless Mobile Advisory. Welcome. Come on up. Lastly, David Campbell, managing partner at Bellwether Capital Partners, Inc., a provider of private equity and advisory services to early-stage, primarily technology-based companies. David is an entrepreneurial senior executive who's raised over $100 million himself in private equity capital as co-founder and CFO of early-stage companies, including some you may have heard of, like Guest Logics and Dexit. Come on down. Thank you. See if this is on. Yep. So we have just one microphone up here, so I'm going to pass it down to you guys as we go. And what I'm going to do is I've got 3 questions for our panel here, and then I'm going to turn it over to you. So this part of the program, we want to talk a little bit about mobile and a little bit about the VC industry in Canada, and just generally sort of test the toothiness of our dragons before we put them before the startups here. So my first question to you guys is a question I think that's been on a lot of people's minds, and we were talking about just before, but the question boils down to is what the hell the deal with the Canadian VC industry right now? And maybe it's not unique to Canada, but we've seen what's effectively a precipitous decline in venture capital investment in this country. Some have described it as potentially the extinction of VC in Canada. So just to kick it off on that note, I wonder what comments you guys have.
I guess I'm at the end of the line here. Yeah, no, I think people, I think, have always asked what the hell is going on with the VC industry, but for different reasons over time. But yeah, right, I think right now we are in probably the worst period of venture capital availability that I've seen. I've been in the industry since the early 80s. And there was a time in the late 80s, after sort of the 1987 market meltdown where it was pretty grim as well. But I think that what we're seeing here is a real sea change. And I think there are a lot of factors that have contributed to that, but I think the venture industry to some degree has been the architect of its own misfortune. I think that some of the investors have contributed to it. I mean, I think the industry is obviously predicated on generating above average rates of return for investors. When you look at the history of the venture capital industry, it's very closely aligned with the IPO market. You see venture rates of return spiking, corresponding with when there's very buoyant IPO markets. Companies can raise money at good valuations. There's currency available for other companies to make acquisitions at good valuations. Since 1999-2000, there has not been a very strong IPO market. As a result, there has not been a very good exit environment. As a result, the returns for vintage funds from anywhere from about 1999 on have been pretty abysmal. I mean, I think a lot of the funds in Canada have done all right on a relative basis, but on an absolute basis, the returns have been pretty mediocre. And so when I think the limited partners that are the source of capital, primarily institutional investors, look at the returns that ventures generated in the last 10 years, they think, it's pretty hard to justify this asset class. You then layer that on top of what happened in the overall economy in the last couple of years, and you get a really exacerbated problem. Most institutional investors have asset allocation models which basically say we're going to put X% into this class, Y% into that class. Venture private equity usually accounts for anywhere from 5 to 8% is the usual allocation. Well, guess what happens when your public equities fall by 40%, your real estate falls by 30%, and your bond funds fall by God knows what, and you've got all kinds of money tied up in illiquid assets. You're suddenly way overweighted in your venture capital private equity class. So you're seeing a lot of institutions, both here in Canada and down in the United States. In the United States, there's even bigger problems, but that just cannot put any more money into the asset class because they're already over allocated. There are a lot of funds in the US, we haven't really had this problem in Canada, that are not meeting capital calls. There are a lot of secondary sales taking place in the US of private equity and venture capital fund positions because they just haven't got the capacity to meet their existing obligations, let alone taking on new ones. So that, I think, is just a perfect storm of situations where it's difficult for the LPs to justify putting the money in. It's impossible for the LPs in some cases to put more money in. And I think everybody looks at it and says, we know that it's an important component of the financial markets, but until we can understand how it can be done in a way that can generate the kinds of rates of returns that are appropriate, which we haven't seen in the last 10 years, we're going to sit on the sidelines. Now, as a practitioner, you say, look, it's a cyclical business. You look through history. It's tied to IPO markets. We haven't had that in the last little while. I think there are a lot of reasons in Canada where the financial markets are structured in such a way that it's increasingly difficult or even more difficult to go public in Canada and have an IPO in Canada than it is in the United States. I think there have been a lot of structural issues and regulatory issues that have contributed to that. So I think there's a lot of blame to go around as to why we're in the situation that we're in, but the reality of life is we're in the situation that we're in, and there's not a lot of money out there.
So if we could maybe pass the mic and talk about a bit more about that, or where we go from here.
Yeah, no, I think Ted was doing a great job explaining exactly the situation, and I really don't have a lot to add. I mean, I think where we go from here is that the existing funds hopefully will have good returns, and that will stimulate more investment. Certainly, we've seen some new investment for fund-to-fund investing that has been partially sponsored through government in Quebec, in Ontario. And so I think that's encouraging, and they're planning to allocate those funds over the next number of years. So that should stimulate new funds, and new funds stimulates new investments, and at least you get a new cycle going. But I would agree with Ted that it's definitely a difficult time for venture capital, particularly in Canada. We operate the Blackberry Partners Fund. And we absolutely would love to invest in Canada, but we invest globally. So we're situated in Toronto, but recognize that there are opportunities, more globally. We do a lot of investing in North America. We've done investment in Israel as well. So there's certainly been a gap in Canada, and certainly something that could be addressed. And I think if you look at the culture in California as an example, where there's a huge sort of funnel of companies and mentorship, and right out of university into this sort of mentoring environment, and the risk profile of entrepreneurs much higher, not afraid to gamble and lose, bet it all, let's do this thing, let's go big or go home. There's certainly a cultural gap there a little bit, I would say. That's not to say there aren't great entrepreneurs in Canada who have that mindset. But certainly there's just a lack of that mentorship that provides just enough support to give early stage entrepreneurs enough infrastructure.
So Randall, would you have to add?
Yes, I think Ted and Matt have gone on at length the woes of the venture capital industry, and I would say, yeah, I'm sure, and we all could, and I would observe that. I'd like to turn it around from the point of view, if you're running a startup, what do you do? And I do believe that more of the issues in Canadian venture capital are unique than common in the world. So if you were a startup in Europe or a startup in the US, you'd have different issues at different times. But I think what's most important for an entrepreneur is knowing that you can't raise single-digit millions or tens of millions of capital in the foreseeable future. And while I believe that may change over time in various ways, I think the biggest issue is more and more startups are being pushed into the lean startup mode. I mean, we have a term for it, we call it Venture 2.0, which, it's a whole different way of building a business than previously. And so that's partly because it's possible, and it's partly because it's a necessity to do that as well. And so specifically, some of the things that I'm seeing come back is with exits now being more like build to get acquired through you have a partnership for a few years, you date before you get married, and exits many times being a long-term path, we are seeing sort of a trend back to strategic investment. Strategic investment had been out of style for a long time. Secondly, and this is probably out of necessity, because we've seen at Verdexus, we've seen venture capital partners in for Series A and not in for Series B because they melted down around us. So we've looked at it, and we've now building lean startups along with, say, other angel investors. And obviously, angel investment is a lot more complicated. It's not institutional. Some people describe it as herding cats, and I think that's a good metaphor. But the truth is, angel rounds, unless a company is really exceptional, usually it's a stretch. You get $500,000, sometimes a little more. You're not getting 3 to 5 million of the typical Series A. So we're seeing that, and we're also seeing governments getting involved in, IAF and funds like that. But even they have limited capacity to top up angel rounds and help people, say, get even $1 million of investment. So the truth is, whereas companies would be raising in the 90s, 5 to 10 million, and then in the last few years maybe 3 to 5 million for a Series A, right now companies are struggling to put $1 million together. And I guess what I would say is, it's like Sergey Brin's old comment is that scarcity breeds creativity, and I do think founders are figuring out ways to work around it, but it's definitely more of a challenge. And so I think I'm going to stop there, but I think the main point is, don't assume as a startup that it's business as usual, and if your EIR is coaching you based on the way he built his business back 5 years ago, do a level set and actually talk to some people that have done investment rounds recently.
I'd agree with everybody else. It's very good. I think just building on what Ted was saying, there's not a lot of money there, right? Venture is by nature high risk and low liquidity, and those are the two things that most of the world wants to avoid today. So just because of that, there's not a lot of money there. Governments have tried to fill a gap to a certain extent. BDC has stepped up with the government has given more capital to BDC, so there is some capital there. Now they only have limited number of people there to actually deploy it effectively, but there is some more money there. The Ontario Emerging Technologies Fund, they're trying to put $50 million out each of the next 5 years, and that's a matching kind of fund, so they can match they can match institutional investors, but they can also match qualified angel groups. So if you have, if you're an early stage startup and you've got 2 or 3 people and you can cobble together $250,000, $500,000, and you can identify those people as your angels, you could potentially get matching funds from the Ontario Emerging Technologies Fund. So I think they're a little bit behind the 8 ball in as far as getting funds out. So that is a good opportunity, a real opportunity today. So at the end of the day, too, though, as Ted said, when the returns are there, the money will flow into the sector in a bigger way. I like the trend towards, like what Matt's doing with a very specialized fund. You see that in other spaces, like XPV Technologies doing, a clean water fund specifically. It's not an environmental technologies fund. It's a clean water fund, and that's a very specific niche. When you get that specific, you should be able to really know your industry inside out, and that, at the end of the day, is what's going to allow the VCs to drive the better returns, which is going to make the money flow into the industry, in my view.
So speaking of better returns, let's bring this to mobile here tonight. Let's, if you'll bear with me, let's go with the hypothesis that perhaps in mobile there are some investment hypotheses or some investment theses that could be bringing some of those returns. And if there was smart money going into mobile now, or if there was some smart companies here pitching ideas, what excites you about the mobile space? So what brings you here today to talk about mobile, or what are the themes that you think have the most opportunity right now in mobile? I want to start this. Okay.
Just like a disclaimer here, I'm not the mobile guy per se here, but we do have some investments in the mobile space. But I really like, at the end of the day, transaction-based models, and I think at the end of the day, the real value that can be driven in the mobile space is helping facilitate physical world transactions. So if you can link whatever mobile application you have to the transaction data, link it to the point of sale in the real physical world, and you have an application that helps drive increased usage at the point of sale, I think that's huge. So location-based services, I think, is a great app. If you can tie that app in with a specific person by potentially linking it with with credit card information or with loyalty card information, I think that drives even greater value. But it's all about using the app, in my view, the mobile apps, to drive more and different consumer behavior at the point of sale. That's kind of where I like to play, where I think there's the greatest opportunities.
What I happen to like about mobile right now is that, especially in Canada and the US, even worldwide, we've actually seen an unleashing of opportunities that go beyond the carriers, which had kind of slowed down innovation in the mobile application space. So specifically, you can argue that some of the new app stores, the app worlds and so on, are the new carriers. And so there's some pretty interesting ways to get to SMB type plays out there, as well as business to consumer plays. It's not clear that the app stores yet are winning for big enterprise type plays, but we are seeing more and more business traction in that space. So what we like is we like applications that are something that people might use every day or once a week, like you said, subscription-based, transactional. Not so keen on things that are 100% reliant on advertising for a couple reasons. One, the biggest of which is probably that mobile advertising still isn't big beyond SMS. It's still taking time to develop, and people are still trying to figure it out. But secondly, because I think we feel that people are getting bombarded with advertising, and so we like more creative business models, generally speaking. And the last thing I would say is we don't see as strong a boundary between mobile and the web, because we think that the future is that application portfolios that are being built will straddle the web and mobile uniquely. And so we view mobile as largely being a delivery platform. But at the same time, over the coming years, we see almost everything that people are doing being able to be done in a mobile way, which is changing the way it was done historically. So mobile is actually an overlay over Web 2.0, you could argue, in one way of looking at it.
I think there's a number of themes that are interesting in mobile, and I agree with you. I mean, I sort of see it a little bit differently. I think mobile is really, the lines are sort of blurring between online and mobile, and things like the iPad and so on sort of start to sort of meld everything together. And so you can look at it more in terms of mobile computing. So what can you do on the go? And as you increase what you can do on the go, that's where the lines start to blur. And I think there's a plethora of opportunities in mobile right now. And maybe to your point on mobile advertising, I think it hasn't really reached its potential yet, but I do think that as a medium, it's very, very powerful for advertisers to reach consumers in specific locations or as they're doing specific things. The context goes way up, which advertisers are incredibly interested in, and the reach goes up because you're in front of your device. And there actually have been some very exciting exits in mobile advertising recently. So Google bought AdMob for $750 million. Apple bought Quattro for $275 million. So there's proof. I mean, we're moving in the right directions, and the major companies out there are valuing mobile, recognizing that this is the future of the platform that people will interact with and engage with on different levels. Other areas I think that are really interesting, and we've actually done, a couple of deals in the mobile advertising space. Other areas I think that are really interesting are mobile commerce. I think to your point, the transactional side of things, driving transactions through your mobile device, even extending the ability to reach your customer at the right time in the right context. So we've done an investment in a company called Digby that extends the retailer's reach to users in the mobile environment. So it really does become sort of an extension of online to mobile, and yet at the same time addresses what's specifically unique about mobile and markets to them in that arena. So that's another area I think is really interesting. I think mobile social gaming is really interesting. I see Rob Ballagher here. How are you? And I think that's another area that's really incredible. I mean, if you look at the online social gaming market, it has exploded with people buying virtual goods and engaging on a whole new level with their games online. And I think mobile is a much larger opportunity that no one has cracked yet. But if you look at sort of the psychological componentry associated with online gaming, mobile is even much more interesting in terms of what you can do when you bring location to bear and more integrated social graphs. It gets pretty exciting. So if you look at what's almost a game/platform called Foursquare on iPhone, I think that's something that I find to be really quite interesting in terms of bringing mobile to the consumer in a fun and yet potentially lucrative way.
Somebody once said that the measure of a person's intelligence is the degree to which they agree with you, so these are really smart guys. I think I think we sort of look at mobile the same way I think that Randall described it, as just a delivery platform. I think that people want to be able to do what they want to do wherever they are. And so I think what they're doing online, on their desktop computer, they want to be able to take seamlessly onto their mobile device. They want to do it through their smartphone, they want to do it through their iPad, they want to do it through their Wi-Fi enabled computer. They want to be able to have that same experience wherever they are and however they're doing it. I think this is an interesting challenge in some respects, because I think if you've got a very popular mobile app, I think you are probably going to have to figure out how to, I don't know, desktopize it, for lack of a better description, because I think people want to be able to have that experience wherever they are. I think the other aspect of mobile that hasn't been explicitly referenced here is just how quickly this market is growing. I mean, I think most of us have a very North American-centric view of things. You look at what's happening in the rest of the world, you look at sort of the growth of this market in emerging economies, you look at how many new phones are coming online on a daily basis in China and India. I think you're getting a weekly increase in India that is equal to the entire subscription base in Canada on a weekly basis. You look at what's happening in Africa in terms of, that's the only option people have. So you've got mobile as both, a platform for all of these esoteric applications and functions, but it's also their basic communication device. And they're doing, we've all read about it, they're doing very basic things in terms of payment, in terms of money transfer, in terms of things that, we're still way behind on in North America because the rest of our infrastructure is so well developed. But the mobile platform in Madagascar and South Africa and Kenya is becoming a bank, is becoming, all sorts of things that we'd never even think of here, because it's really the only platform that they have. So I think when you look at the applications that are possible on a global basis and how quickly this market's growing, this is a place that you just have got to be. It's probably the most rapidly growing market of any kind of investment that you could make. And I think very often we get stuck in this North American, Western European-centric view of things, but what's happening in the rest of the world in terms of growth is phenomenal. And they're going to need a lot of this stuff. And it's not going to necessarily be games, but it's going to be a lot more basic stuff, but stuff that's fundamentally a lot more valuable, too.
We may even find them leapfrogging us in terms of sophistication in apps in the near future, or some point in the future. At Mobile World Congress last week, Eric Schmidt of Google was saying that they have a new policy, which is not a deliberate policy, but an inadvertent one, where they discovered that their new strategy for rolling out web apps was mobile first, that their engineers were building the mobile app and then trying to figure out how to make a web version of it afterwards. Yeah, exactly. So my third question was going to be around advice to entrepreneurs, but I think you've covered off some of that pretty well. So I want to just take a couple minutes to take a question or two from the audience before we go to our entrepreneurs here today. Want to move to the mic, or if you just shout it out, I'll repeat it. Or just shout it out, I'll repeat it. Oh, there we go.
Thanks. Just a couple questions, quick ones for the panel. I think there's always been that criticism that we are a little bit more conservative in Canada, and perhaps that, as a result, doesn't always yield, good returns. Is that a myth more than reality? And what do you think you can do to overcome this? Because to a certain degree, sometimes we see south of the border, some of the USPCs, of course, they have access to more capital, et cetera, but they're a little bit more avant-garde in where they find the talent. They only don't go after business guys only. They go sometimes after people in the industry. So I just wanted to hear your experience.
One of our panelists did say he almost brought his tearaway pants today, so.
Thanks, Tom. Well, I think that's a complex question, and it's been covered at this event on other evenings. But I would say the short answer is perhaps we're a little bit more culturally conservative, but the types of entrepreneurs that built startups I think are world-class here, and the quality of the engineering is great. I think the capital constraint is probably the biggest issue, so you're less likely to build an application that just sucks in capital like Twitter here than in the Silicon Valley. It'd be great if that could change.
Yeah, I think you're right. I mean, there's great engineers here. There's great schools here. There's great drive, although maybe not the same level of drive. But I think there's sort of a layer missing in terms of that mentorship. Personally, when I just in terms of just a general infrastructure that really helps mold the sort of brains of the future into companies. And there's a big gap between, you know, graduating from university and just having that infrastructure to really go for it in an environment that helps you increase the probability of success. And some areas are doing it really well. I think that, you know, Kitchener-Waterloo is starting to do a really good job of it. You know, parts of Toronto, even Montreal. But I don't think anyone's doing it great. I don't think anyone's really ready to say we've nailed this like what you see in at Stanford and so on in the U.S. Or even at parts of Boston and Massachusetts area. So I think we have a long way to go. But I think that's it. And so I wouldn't sort of say it's like this epidemic where we just can't win, because there's incredible quality and great companies coming out of Canada. But I don't think we've really been able to harness our potential.
Thank you. We got another question at the back there, maybe? Oh, no, you just, Alex, do you have a question?
Yeah, no, just letting everyone know.
Just to add on to the answers, I mean, I think the biggest constraint is capital, quite frankly. I mean, I think you look at a lot of the companies that have been started here, we've built great technologies. They've been acquired way too early. They've never become fully formed, fundamentally sound companies. We've sold these companies for technology value because we haven't had access to capital markets that have allowed us to raise that 80 or $100 million that you need to really drive it to the next level. And so as a result, we've never built, and we've got a couple of examples now. We've got RIM, we had Newbridge, where you can then start to get those people with the experience that can create the next startup company. They've built a company. They've been through the wars. They've built international distribution. They've built international sales models. They've established relationships with major carriers and major device manufacturers around the world. They've gone through all that. But way too often we get to the point where we've got $20 million invested. We need to take it to the next level. We've proven out the technology, and it gets acquired by, pick a company, Motorola, Microsoft, Google. And it becomes a research lab in Canada, and all the business development takes place south of the border, and there's huge value. I mean, there's all kinds of examples of Canadian companies that were bought by big American or big European companies, and one of their competitors eventually went public and was worth $3 or $4 billion and is a major player in that space. This goes back to what I was saying earlier. We haven't got a NASDAQ here. We haven't got a level of capital that will come into those early stage emerging companies. If you were a mine, you're building a mining company, you get all kinds of junior capital markets. You just haven't got that here. And that's one of the things that I think we need to help develop and get regulatory focus on to sort of try and bring that level of capital to the table so that we can build those kinds of companies and not have to sell too early.
Thank you. You're here. So speaking of some companies who haven't sold too early yet, I think we'll move to our pitch stage. First up, we have Kevin Callahan, who's going to be telling us about CrowdSafe. A little hand for our...
Can you hear me? Yep. All right. So a little panel. Thank you for taking the time to listen to my startup and spinning around. I like that. I look forward to your feedback. My name is Kevin Callahan, and I'm here to talk to you about a new what to do and save money doing it mobile platform. So I only have 5 minutes, so let's get going. Sorry. So like I said before, this answers the question of what should we do today and how are we going to do it. Also allows users to save money while doing it, but at the same time protecting businesses from diluting their brand by making it exclusive through our platform. We will initially offer 1 CrowdSafe per day in each market we serve, but eventually this can be expanded to include a full day's activities. The deal is available on a smartphone application as well as online, creating the instant gratification that people desire. Full description of the activity, the amount saved, the costs involved, and all will allow the person to make a purchase instantly from their iPhone or similar phone. So the good news is this is based on a slightly different yet extremely successful business in the United States. Competition includes Groupon and Buy With Me. These two companies are one-year-old sites. They're not mobile, do not service Canadians, and are deal sites rather than activity platforms. Currently they offer services within 1 or 2 or 3 markets within the United States, but not on a complete American scale. Our site is much more interactive than a site similar to Red Flag's deal that you have here in Canada, and it's more of a what to do rather than just making the best deal. So why am I here? Who am I? I've managed and grown several ventures in various industries. I'm currently the CEO of Import Trader, a successful car importation business, and I have a BCom from Ryerson and an MBA from the Richard Ivey School of Business. All right, so let's walk you through it a little bit. So these are mock-ups from various sites that I've taken, and it'll be similar to what we'd like to create. As you can see, the screen shows a buy now option, which I think is imperative in today's market. The value and the lots of information that you can have. You can purchase it for a friend, you can see how many people have purchased it, et cetera, et cetera. Also, it's important to note that there will be a team of people that are going out to find interesting things. So there's a spa as an example here. So this is, we can find a spa and it would get a deal on that particular deal. There would be a review of the deal. So this would be written by one of our employees, and it would just explain what you're purchasing, how you're purchasing it, talk a little bit to what you're getting, and it just makes you feel a bit more comfortable with what you're doing. And especially if you're sitting with your friends saying, what are we going to do today? Yeah, let's go to the spa, that's great. And you can just read up about some of the reviews and things like that. Also, you can use Google Maps to help you guide to the location and see what else is in the neighborhood. This is an example of our discussion thread that would allow people to interact and others to discuss the particular deal. This also creates stickiness and the ability to share with others. They're not currently CrowdSave users. Typical billing screen. Like I said before, instant gratification. You can purchase it. David, to your point, you can buy it right from your phone. Or if you want, you can hold it until a later date. Just did 1 minute? All right. So just did some quick financials. As I show, we're rolling it out in North America, primarily in Canada to begin with, Toronto, Montreal, Vancouver. This is based on 5% of our users using the service. This is also based on having a loss for the first 8 months starting in April. There's an EBIT of 200,000, and then year 3, EBIT of about 600,000. So relatively conservative numbers, and that's pretty much what we're looking to do. How much are we trying to raise? Well, see, that was the catch-22. We had to ask for $1 million to get here, but realistically, realistically, a platform like this can be put together, bootstrapped for about $100,000. That's with a world-class website, world-class apps, great sales team, just having a great amount of people putting it together, I think, with some obviously equity for those people. So I don't know what we do now. Do we ask questions, or how does that work?
Yep, we'll give some questions.
So, what do you do?
What do I do?
Like, I really, like, you sort of started off, like, on the assumption that I sort of knew.
Okay.
I think if I get it right, the crowd creates deals. Is it by having a certain amount of certain numbers that you then sort of sell and say, if we reach some critical mass, will you mark down and give this group a deal? Is that
similar?
Okay.
You're close. I would say that down the road, that's what we could do. At the beginning, it would be a matter of saying to, let's say, again, the spa, use as an example, say that, okay, this is a $100 deal that you would normally have. If you give it to us for $40, we'll sell it for $50, so making a $10 spread. At the same time, we're going to market it to our entire user base. At the beginning, it's going to be zero. Obviously, there's not going to be anybody. We'd like to build up the amount of different services that we offer. And then down the road, when we can say, okay, listen, we can get better deals, better groups, then it comes to exactly what you're saying.
okay? Thanks. And how do you how do you make it, so A, how do you attract the retailers in the first instance when you don't really have the audience? Because it's a real chicken and egg kind
Exactly,
of problem.
yep.
And then even once you get an audience, how do you capture and keep them? I mean, how do you make it relevant? Do you plan to have multiple offers going at once?
Exactly. Yep. Yeah, you're right on mine. So at the very beginning, we'd like to have interesting niche things that people don't do. I mean, I find myself, maybe everybody's the same, doing the same things every weekend. So we'd like to have interesting, sightseeing. I think I actually missed a slide, what we call the kerfuffle, but basically interesting things that people don't normally do. So that's when we would have a great sales team saying, you have this great product, you teach people how to bake cookies or whatever it is. We would like to market it for you free, and you would have a bit of a markdown and we make a cut. So basically it's pretty much like affiliate advertising. Then down the road, how do we make it relevant? We would like to have like a full day of things to do. So you have your lunch at some sort of restaurant, you have your activity that you're doing, a dinner, second activity, all for a deal, and you can do it now or you can bank it for later.
Okay, thanks.
Thank you. Thanks, guys. Appreciate it.
Good job, Kevin. Our next brave entrepreneur is David from Clip Mobile.
Thank you very much, guys, for giving me the opportunity to present today and present Clip Mobile. We launched Canada's first location-based mobile coupon network in February. And this is kind of an exciting event because it kicks off our search for strategic partners, funding partners, to talk to a bunch of savvy individuals as to how to grow our scrappy startup into a truly great mobile services company. We launched our iPhone app and Android app in January, February, and we're on track to launch Blackberry beta in March. So we're very excited about that. This is Canada's first location-based mobile coupon network. So we're a month in, and this is a snapshot of what's happening. We have 1,600 users, 57 merchant locations, and 57 merchants at 250 merchant locations across Canada. And we're growing every day. At the end of February, and if we continue to grow on track with our merchant-based subscription pricing model, we're on track to go revenues in May and to go revenue positive in year one. So we're very excited about that. Well, how did we get here? Certainly a concerted word of mouth and sales and marketing effort, some media coverage, as well as buying beers in the technology community have helped us get here. But what else? Well, this isn't version 1.0. This is actually version 1.6 of the software. And if you've had a chance to download the app, this is what is creating opportunities for us. It's functioning really, really well. And it's creating a pretty revolutionary experience for merchants and marketers and users alike. And this is what is driving adoption and creating opportunities for us. We have a sales presence in Vancouver. It's turning out to be a very hot market, something to do with the West Coast lifestyle. They love their iPhones. A lot of small businesses out there as well. We have the ability to leverage with affiliate networks. Quite simply, that means that if somebody, an existing merchant network exists, such as Dine.to, Wayspa.com, if they already own the relationship, we're happy to partner with them and leverage that relationship rather than try and build it all ourselves. This is allowing us to scale out across the country very, very quickly. The coupon management system is proving to be a scalable solution for businesses big and small. We've had some really great feedback on it, and we continue to develop it. And we're facing a perfect storm of market opportunity. Handset evolution, the massive uptake in smartphones amongst Canadians, and a greater awareness that you can do more than just talk and text with your phone. This is all driving it. And as we just learned, Canadians do love deals. It's a very timely opportunity to be in the market. And deals are something that is deeply ingrained in what it means to be a Canadian consumer. We're just giving everybody a chance to do it where and when they want it, which is on their phone. This is our coupon management system where merchants and users create, manage, and analyze an unlimited number of offers in real time. And you can see this is month one with Nike Endurance Sports. We're showing some of their data. We're already creating a significant number of gross impressions, 437 impressions, and unique users, 328 unique users. And you can drill down into that data on a per location, per coupon basis. So you get a very rich data set. But that's not all. We also collect a tremendous amount of location-based data from our users. And this can be used to provide information about where people are when they're looking at offers and how they go and redeem. So this is our 1 month data set overlaid over Google Maps in an infographics layout. And here we are on Queen Street East at the Nike Endurance Sports Store, and figuring out, giving merchants and marketers a clear picture of where people are and what they're doing to help with new store development, with further targeted marketing initiatives. It's a very, very rich data set. This is only after 1 month. You can imagine what this is going to look like after a year. So we're very, very excited about that. And you can see some of our merchant locations. It is important to note that we do not collect personal information, and the data that we do collect is meant to be viewed at a level of abstraction only. Okay? And so we're excited. That data is pretty sexy. We think it's very valuable. BlackBerry is coming. You got to play for the home team. So all you BlackBerry users, you're not going to have to wait very long. We're delivering a beta in March. If you go to our website and sign up for our newsletter, we'll send you an email and you guys can be our beta testers. We are the first to market with a national presence, and we have been absolutely astounded at how quickly some very large national merchants have come on board. And we have several large brands rolling out pilots, which will give us, certainly it's a matter of high value offers. You know, content is king. The users will come where the offers are. With more mainstream offers, we'll have more mainstream users. So we're very excited about that. The pipeline is strong. The affinity, we've been floored at the affinity for our merchant partners to co-brand and co-market with us, which that means you will see us on the point of sale, you will see us on the door badge, you'll see us on their marketing materials. You will come to understand that Clip means savings on your phone. And lastly, we do have an opportunity that we're moving very quickly on to integrate the very sticky group buying model with another Canadian startup called teambuy.ca. So I think I'm out of time. I'll take questions. Thank you.
What's your business model? I mean, how do you make money? I can see several places where it's possible. I'm just curious.
Yes, subscription based on the merchant side, $50 per month per location for 1 to 10 locations, and $30 per month for anything over 10 locations. And this model itself has been validated by a US competitor who got started last year, and they managed to sign up 10,000 merchant locations across the US. So, Yowza. I'm not allowed to say their name. Come on. Sorry. They're the competitor.
Yeah, I didn't catch your name.
David.
David, I downloaded your app because I was turned the other way, and I noticed you got a 2 out of 5 for reviews, and I know the reviewing on the iPhone isn't always fair, but can you comment on that? And the second part of that is, I guess I have some concern about some of the issues that people had were you're not available here, so can you really scale the business in time? Because it's not clear how much you do that. Although the good news was, there was how many? 71 locations within 2 kilometers of here, so that was good. Yeah. But so that's my question.
A lot of phone calls. So the rating system is deeply flawed. We know that already. But it happened to do with the growing pains that comes with the chicken and egg scenario. We launched January 25th. We wanted to be we wanted to be Canada's national coupon network. So we put out a press release that went nationally. People across the country downloaded the application, and unfortunately, some of them did not have a good first experience because we did not have any merchants in Calgary. At that point, we didn't have any merchants in Vancouver. And it was unfortunate, and in fact, we actually flipped the model on its head, and I don't know if you've seen the copy on the iTunes App Store, but we actually crowdsourced the solution. We said, if you think this is a valuable tool, and you have a favorite merchant that you'd like to get their mobile coupons, go into the store, pitch them if you can get your name on the merchant sign-up sheet, we'll send you $25. It didn't really go gangbusters, but it has slowed or stopped the negative reviews because people have trouble being a naysayer if we're offering them $25.
That's great creativity. Way to go. Seriously, that's brilliant.
It was
Good
staring
job.
in the face of, of failed launch. Yeah, thank you. Thank you.
So I think, I mean, first of all, love the space. It's a really difficult one to crack. I think one of the big things is how do you integrate into these retailers? So the space itself, the mobile couponing space, is really exciting. But the thing that excites me a lot about it is, I mean, people clip coupons today. It is so antiquated. And I don't know if everyone knows, but you bring in this coupon to whatever store, Shoppers, whatever, and they take it. It was by Procter & Gamble, and it was in something that landed on your doorstep, and they clip it, and all those things actually got counted and sent to Mexico, where they're all actually counted by hand. I mean,
Newfoundland,
talk
actually.
about it.
They get
New
sent
Brunswick?
to Newfoundland. Some poor
Okay.
soul has to
New
count.
Brunswick, not Mexico.
Yeah, New Brunswick, Newfoundland. That's right.
It's. I mean, I find that
It
amazing.
needs a
I mean, can you
serious
find a
jolt.
better
Well,
area to innovate
and that
in?
is
I mean,
what
like,
that
that's
is what
perfect.
we need resources for. And in fact, fundamentally, I do believe that the market right now is asking for location-based mobile coupons. The opportunity here is to integrate other elements of what it means to be a Canadian consumer, which is obviously the coalition loyalty model, which is obviously the way that you can perpetuate and clean out that flawed process of clipping out coupons, sending them out to Newfoundland. And we're seeing that happening in the States. It's a matter of having the partners here to do it and having the resources here to do it better than anybody else.
How much, I mean, and this is something that I think is an issue broadly in mobile and in a lot of other applications as well, is how much do you have to integrate with the merchants in terms of their point of sale systems, in terms of their back-end data acquisition, inventory? I mean, how much does that couponing system...
In fact, we don't at this point. We would love to, but there is a million different types of point-of-sale software. What we do is when you download the app, you'll see that we use a discount code because that is the default. That is the simplest way any single point-of-sale can accept a discount code. If you can't get a barcode to scan, person punches it in. So that's where we're starting. I do believe that we could push out an update that would do 2D barcode scanning in a week. It would be a great update for us to have, but it requires investment on behalf of the merchant partner. Somebody will do it, and they're going to have a really sexy implementation. I think it'll be Freshie. They get it, right? They're going to have a 2D barcode that you scan. They'll spend a couple $100,000 or $50,000 on the 2D barcode scanners, and people will walk up. Remember what happened with Air Canada? The fact that you can get your boarding pass on your BlackBerry. Even though it was a bad user experience, people still talked about that. My mom knows about that you can get her boarding pass on her phone. That will be a game changer for somebody, and we'd be happy to do it with them.
But I think it's on a larger issue. I mean, I think people sometimes miss the fact that there are a lot of other things that you have to do to make it work when you're working with carriers in particular, but large merchants.
We don't work with carriers. We bypass all of
I'm
them.
just sort of saying macro kind of message.
Well, we have various levels of access. So we have the affiliate access, which would allow somebody like a director of marketing to have overseeing access to all of their locations across Canada. And then we can actually divvy that down so that the individual manager can access their location and can go in and create, manage, and analyze their accounts.
That data is worth something too. I mean, you should be charging for the data as well.
Oh, well, it's the carrot, right? It's like we're really looking forward to that because the $30 a month is it's a new business model, but when they see the data and what they can do with the data, that will be a great tool for us to motivate them to continue to work with us. Yeah.
Any last question before we move on?
How long have the retailers been lit up, and are they getting value out of it? I mean, you're going to have to sort of suffer through that first evolution,
Certainly.
and they're paying
it's
even
been unbelievable.
$50 a month to some of these.
Yeah, so we
guys
haven't
is big.
monetized yet. We're offering everybody the service for 3 months for free to try. And our commitment to them, to merchants big and small, is that we cannot monetize until we are creating value at a per location basis. But we've been really impressed with the uptake. Nike it was probably our strongest performing coupon. But that is 437 people who know that there was a 25% off discount at that location. They know where that location is. If you were to compare that with email marketing or any other type of direct marketing out there, you just don't get that. So to your point, integration, understanding how many people actually go in and redeem at the point of sale and how many times that coupon code is entered in is essential to closing the loop. And we work with our our merchant partners to do that. Thank you very much.
Thank you. I found another microphone. Next up, we have Jeremy Fan talking about e-receipt mobile.
Good evening, and thank you for hearing our presentation. And I'd like to thank David Campbell for inadvertently talking about our pitch before we had the chance to do the presentation. My name is Aaron Desjardins, and my colleague here is Jeremy Fan. We have over 7 years of IT and business experience in retail information systems, as well as freelance IT consulting. The service we're showcasing this evening is eReceipt Mobile. Our product is a modernization of something that hasn't changed in 100 years, to the detriment of both consumers and retailers, the ubiquitous receipt. For over a century, retailers have been using paper transactional records to allow consumers to keep track of purchases. E-receipt is going to change the perception that paper is the only way to go. There is currently no competing product or service available in Canada at this time. By integrating existing technologies such as electronic signatures and point-of-sale systems, the significant increase in smartphone penetration, and consumers' acceptance of digital technologies such as self-serve checkouts, e-receipt aims to modernize the analog paper receipt. Search in any wallet, and most likely you'll find a thermal printed piece of paper that's yellowing and fading. E-receipt will allow consumers to receive their receipts electronically, complete with all the information as a traditional receipt, but in a digital format that can be saved, printed, and shared. Retailers will save hundreds of thousands of dollars on equipment and consumables while reducing their carbon footprint. They will also gain access to valuable analytics and the ability to target opt-in consumers with marketing initiatives. Using a digital ID, such as a QR code or barcode, accounts can be linked to registered users. Similarly, users can provide a unique account number or the email associated with that account. All receipts are aggregated in a user-friendly interface, viewable through native applications for the major smartphone platforms, as well as through a secure website. Receipts are organized according to a user's preference, such as date, store, location, price, etc. Users can perform searches based on any criteria. The application will also provide the user with stored policies, hours, location, and other relevant data. For retailers that have not yet adopted e-receipt, users will be able to manually enter in the information and geotag their receipt. Users will be able to download secure PDFs of their receipts or any transaction data in standard formats such as CSV, Excel, QuickBooks, and other relevant formats. Another major functionality will be the ability to share purchases with social networks such as Twitter, Facebook, Red Flag Deals, Blippy, and other relevant sites. Users can also grant access to their transactions to other users, for example, giving the accounting department access to your business travel expenses. To encourage adoption, e-receipt will offer an incentive program based upon how much paper the user is saving.
Thank you, Aaron. So what's in it for the retailers? Well, first thing is they're going to reduce their carbon footprint, which is a huge thing. The second thing is it's going to help with checkouts. Just saving 10 seconds per transaction, 10 transactions per hour. For a big retailer, like 200-300 stores, it's 300 hours a year, just off the top. Analytics. Additionally, retailers will gain another source of valuable marketing data by seeing what users are sharing, where users are purchasing. And a lot of stores now print this little coupon or code and ask consumers to fill in surveys. Well, the surveys will be available natively through the application, giving the user something to do. And this has been shown to increase participation instead of having to find a receipt, log in, do another survey. So merchants. E-receipt aims to target consumers' most visited merchants, the ones where you're going to visit the most. And gas stations, food, grocery stores, as well as retail merchants and apparel and consumer electronics. Many retailers that don't currently give a receipt due to the high cost of it or the low transaction value, like who wants a receipt for coffee at Tim Hortons, will now be able to provide a receipt quickly and efficiently. In the future, to make things easier, we're looking at integrating either an RFID tag or or associating it with a loyalty program. So they scan their air miles, it automatically switches over to an electronic receipt. So trying to make it as seamless as possible for the retailers. And we're just going to open to any questions.
What does the merchant or the retailer have to do, or the consumer have to do, in order to just be able to walk up and get the receipt? That's sort of where I missed. And is there a change to consumer behavior required? What happens there?
Well, first off, the consumer will register an account to receive the receipts. And then when they go to any participating merchant, they'll say that they have an e-receipt account, so either through the barcode or the scanner or an RFID tag activates. So instead of getting that paper receipt, it's like when you go to a grocery store and they're asking, paper or plastic, it'll be paper or electronic. And we've worked with different point of sale systems. We're going to target the largest ones first: the HP, Fujitsu, the GlobalServe, NCR. A lot of the merchant systems already save electronically at XML or text, so we'll be parsing it on our side. Everything will be secure.
Yeah, no, I like the disruption that you're trying to do here, and I think it's interesting. I think it's gonna be difficult because the consumer behavior element associated with it, where I go to one place and they say, oh, you got to sign up on this website. I go to another place, maybe someone else got that account. Now my receipts are in different spots. I'm like trying to figure out which. So it's a challenging one. I think it's cool and interesting, and I think it's disruptive. So I congratulate you on that. But definitely you got to think through how you get your consumers like engaged without having to sort of put them through some major registration process.
Yeah, well, it'll be a single registration for an account, and then they'll receive all the receipts from multiple merchants in that one place. So it's not you're not registering multiple times. You're registering a single time for an electronic receipt account.
But you got to win every merchant.
Yeah, well, the major ones.
Yeah, I like the concept, but how do you strengthen the value proposition to the consumer? Because I'm with Matt. I mean, it's a bit of overhead here for the consumer to go sign up, and if you don't have that many merchants where you can get the e-receipts, so is there a way to strengthen that value proposition for the consumer to drive them to actually sign up? And what is the delivery mechanism whereby is it just through the wireless network that comes to my phone?
Yeah, you'll be able to access the receipts online through a website and through native applications on your phone. I can just use an example myself. I'm trying to look for a receipt because I need to do a warranty claim on a piece of hardware, and I can't find it right now. So I've called them, and I'm trying to find information so I can get that claim. So now you can save it, you can store it, you can print it. The big thing is all your information's in one place, and you always have it with you.
I would make the comment that I see this as, I don't see the behavior problem for the early adopters, but I think your challenge is to get to critical mass, and maybe there's not enough time to go over that. I'm not sure how you're going to do that, but maybe to ask the question another way, you haven't indicated how you're going to make money or how much you're going to raise, how much it's going to take you to break even and stuff. And so I'm kind of curious in your thoughts on that, because I think you're doing something disruptive, as Matt says, but I'd like to know how you're going to get there and what your thoughts are.
Most of the retailer will have to swallow the expense of like a minor amount of 1 cent per receipt over $10. If it's under $10, say for a coffee or something that's a minor transaction, why should they be paying for something that they don't really need to track? Or if they wanted to track it, they still have the analytics and it's free to them.
Sorry. Yeah, just to build on that, we're building on a recurring revenue model based on transaction fees, but very, very low. We're making it up in volume. And then through other services like being able to provide, if the merchants want to be able to do a survey, that'll cost them, that type of stuff.
And how much are you going to raise for this? How much are you seeking? And what's that going to get in the company? Like, how far is that going to get you on that goal you have?
Well, we have detailed business plans. We've done 5-year projections based on revenue, and we're targeting, like right now, just 0.5% of smartphone users. But we have projections based on development costs. So development costs for Apple, iPhone app is about 300 hours. The Blackberry is about 400 to 450 hours with testing, that type of stuff. We've talked to developers on.
So you're pre-product. You don't have the product yet. You're
No, but we've done the.
You're trying to get a concept funded then, in effect. Yeah. Okay. Yeah.
Because retailers could have care of saving 5% of the fees. You're saying you're targeting 5% of the smartphone users. So at some point, people are going to say, I'm prepared to shift over because I can save enough on paper, but if I'm still having to basically print a paper receipt every time, am I prepared to absorb the cost of doing this?
It's taking away the whole printing of the paper receipt and just storing it digitally. So it's just on the user's phone. If it's for security reasons where they want to print a receipt so that they're walking out the door with something so they can scan to make sure they've got everything that they purchased, they can do that. It's mainly minimizing the cost to the retailer and then...
I understand that. I'm just saying at what level are they prepared to make that investment? Because I think they're going to want to see a big enough portion of their customer base want an electronic receipt.
Yeah, sorry, the 5% wasn't that 5%, we only 5%, but that was our first year projections of users using it, adopting it.
As I was saying, there's going to be a chicken and an egg thing, is when are the retailers going to adopt it? Because they want to see that there's going to be a big enough percentage of their customer base that's using it to justify, the investment of time and training and whatever else.
I would agree with you, and I think that maybe your customer isn't the merchant themselves. Your customer might be somebody who already has a lot of relationships with merchants. It might be a payment network or somebody like that. It's a problem that somebody's going to have to solve at some point, but there's obviously some significant network effects between here and there. Thank you very much, guys. Can we get a hand? Lastly, our last presentation for the night, we have Thomas Beckerman going to be telling us about Zets Mobile.
Ladies and gentlemen, just a quick reminder, once we go through all the presentations and the panelists have their last questions here, what we're going to do is we'll take some questions from the audience to close off the night.
Well, thank you for inviting me to join you this evening. I appreciate the opportunity to present our startup and look forward to your feedback. Oops. Most problems. There we go. I founded Zets Mobile last year, and my career has spanned over 30 years in software development and marketing services. In that time, I've led 7 startups, most recently in mobile. My partner is based in Belgium, heads our European business development efforts, and Hugo van Rijn has been a journalist, TV news anchor, entrepreneur, and multimedia producer. Since our startup, Zets Mobile has successfully launched 3 iPhone applications, iVideo, iVideo Lite, and Games 2010. The iVideo pair of applications is the leading independent video podcast aggregation app in Apple's App Store, having reached the top 100 list in its category in over 30 countries. But we're not here to talk about past accomplishments, we're here to talk about our future. Today, of course, is a great day to celebrate sport. The last 17 days have reminded us all of the power of sports to bring us together, to motivate us. Sports are at the core of our company's future. Last night, we saw a remarkable demonstration of the excitement possible in a live stadium sports event. In Canada, it's all about hockey. In the US, it's football, baseball, basketball. In the rest of the world, it's soccer. No matter where you live, there's a great passion for the local favorite sport. But in a live event, most of the fans are actually far away from the action, have only a single vantage point, and apart from a jumbotron, have little benefit delivered from the potential of technology to enhance their experience. If they stay home, fans get to watch a great multimedia presentation on a big screen in the comfort of their living room with channel selection, replays, commentary, and their own low-cost refreshments close at hand. So why go to the stadium? We have the answer to that question, and that's what I'd like to share with you today. We Got Game, our mobile sports platform, will be deployed across all Major League sports. Using mobile devices and server-side technologies will enhance the fan's experience like never before. We put the fan in control with multiple user-selectable live camera angles, on-demand replays, social media interaction, and Jumbotron and digital display integration. The experience is delivered in stadium and can also be delivered to fan zones and across the internet to mobile handsets, PCs, and Macs. Our platform puts the fan back in control of their sports experience, no matter where they may be or what device they use. But We Got Game is also of crucial importance to brand sponsors and sports franchises. We Got Game connects brands with a prime target audience during the game experience. Its embedded marketing platform delivers video commercials, games, contests, social marketing, and one-to-one CRM capabilities. For sports franchises, the enhanced fan experience will encourage attendance by providing a better multimedia experience than they can get at home on their HD entertainment systems. And franchises that deploy We Got Game will enhance their value to brand sponsors by providing a highly sophisticated marketing platform. We are currently in the process of pre-marketing, developing initial partnerships with brands, sports leagues, and franchises. And we've had positive discussions with prospective partners in hockey, basketball, and soccer. We're also in the design and development stage for technology, including Wi-Fi infrastructure, broadcast interface, transcoding, server and mobile applications, and content delivery network integration. We have completed our initial technology partner selection and platform design, and our first stadium launches are targeted for winter 2010. We'll offer a range of mobile device platforms to cover the broadest possible audience of fans. We're partnering with technology leaders for our Wi-Fi infrastructure, transcoding, and content delivery requirements, including Cisco, Akamai, and Inlet. Our streaming platform delivers ultra-low latency, only a few seconds from camera to device, for a virtually real-time experience in stadium or anywhere in the world. Our goal is to deliver a revolutionary stadium sports experience for fans, to extend that experience beyond the stadium, to put fans in control, and to provide economic benefits for brand marketers and franchises. Our financial goals are to grow to 50 stadium installations by year 5. Our revenue margin and EBITDA projections are based upon a mixed revenue model, with 2/3 of revenues from brands and 1/3 from consumers. To succeed, we need partners with the right stuff, a shared passion for sports, the desire to enhance and extend the fan experience, a belief in our ability to get it done together, and of course the financial resources to help make it happen. I believe we can change sports forever. Thanks.
I mean, it's an interesting idea, and I think everybody can intuitively relate to it, but I mean, it strikes me as a very ambitious set of requirements to get this accomplished. I mean, are you looking at going through the network? Are you going over the top? You know, I think if you're going through a network relationship, it's going to be a very different kind of process than if you're trying to do it direct.
I'm not sure I know what you mean by network.
Well, I mean, if you are, yeah, who are you saying to me? If I've got my Blackberry or my smartphone device and I'm on Rogers, are you going to be delivering this through the Rogers network, or am I going to a separate place to get it?
Oh, I'm sorry, I didn't understand. The in-stadium experience will be delivered through Wi-Fi. And so each stadium has to be sold separately, each franchise separately, and you can't really deliver this kind of content. It's very rich media content. You can't deliver this into a stadium over 3G. The audience is too dense, and so the experience will suffer accordingly.
Exactly.
And so we're looking to partner with major hotspot companies and to put in the infrastructure in stadium to deliver this in stadium. That's one aspect of the platform. The other aspect of the platform is once that is in stadium, which is our primary focus, to extend it outside of stadium, again,
delivery through Wi-Fi, but the Wi-Fi might be in your Starbucks, it might be in your home, it might be in your office.
And looking at going on to all those platforms, I mean, there's some huge transcoding challenges in terms of all the nuances of everybody's OS and
there are.
nice OS.
I've been working in rich media for mobile for, I guess, 7 years now, before anyone really thought it was even possible. We believe we have the solutions to transcode for all major platforms.
Where's the content actually coming from? Who's filming the content?
We have two ways of doing that. There's the broadcast truck in the stadium, and that has some obvious benefits, but it also has some obvious costs. We also are working towards a camera system of our own that we can install in the stadium. So there will be two options there.
I'm just trying to get my head around it a little bit. I mean, it sounds very interesting, and I agree intuitively there's a lot that can be done in terms of the in-stadium experience, so I agree with you on that. But I'm just trying to get a sense of the cost of integration or running this for that, franchise owner, stadium owner, whatever. I mean, I think there's a lot you can do, but again, is this realistic from a cost perspective?
We're sure that it is. We've done the homework. Essentially, the infrastructure required in stadium costs are somewhere around $200,000 to $300,000. A lot of that cost is a Wi-Fi network.
But you're talking, I mean, from what I saw there in terms of the promise, you're talking about angles I can't get on television. You're talking about, someone effectively rebroadcasting what's happening in the event, which requires a huge amount, I would think, of capital expenditure to get it right. Then you need operators. Then you need, are you sure?
I'm sure the capital cost.
Okay.
Being that, and part of that capital cost, a fair chunk of that capital cost, roughly half, is Wi-Fi. And we expect that cost to be borne by Wi-Fi hotspot partnerships, other companies.
Yeah, I mean, I love that you engage the audience and you have a platform to push out quizzes and information. I think that's great, but certainly would, here.
So I mean, you're kind of going beyond the Jumbotron to the mini-metron, or mini-metron.
Exactly, it's the Jumbotron in your pocket.
Here's the question that I have. Well, two questions. First of all, is this $2.5 million investment in the whole business, including the existing portfolio of applications, or is it a new business venture that you're spinning out? And the second question is, I'm trying to follow the money from the people that are paying, like the stadiums and so on, and how much it's going to cost. So I'm assuming you can do it in a cost-effective way. I'm trying to still figure out how you can scalably make money. So walk us through where the money flows as you understand it.
The money flows about 2/3 from brand sponsors. We're working towards a solution where in the stadium, the brand sponsors, the Pepsis, the Cokes, the McDonald's, are paying the freight because they already are making a massive investment in these buildings. They essentially purchase the rights to be the exclusive supplier of either hamburgers or soft drinks or whatever it is in a stadium. And after speaking to Pepsi New York and others, they tell me they're not realizing the benefits of those investments. They're looking for ways to realize on those investments. So they bought into these buildings, whether it's the ACC or whether it's Yankee Stadium or wherever, and they're selling their product, but they're not getting the marketing value out of those properties. And this is a way for them to get marketing value out of those properties. So if you look on the roster of any major league team, you'll see each of them has 50 to 70 important corporate sponsors. And most of those folks would be very happy with some added value to what they've sunk into that partnership.
All right, well, thank you very much. I think that's going to close us out. We were out of time here today. Just do we have time at the back for any last questions for for our panel here? Or for one of our entrepreneurs?
Got one back here.
No, if not, then I think we'll save that time for going out for a beer. Oh, does... Does Ron always have a question?
Good question, so.
Okay, now just had a question for the mobile coupon startup. If they thought of working with the carriers to increase the so-called relevance vector. So let's say if it goes back to the theme that I discussed on the last meeting. Like basically, if let's say I download the Billy Joel ringtone, right? The carrier knows this. Can you then send me an ad from HMV for Billy Joel's new album? Give me a coupon for that. So my probability of actually executing a transaction increases. Just a thought.
Is that for Kevin or is that for Dave?
Actually, for Dave.
Okay.
I don't know whether I can really give a very informed answer on this because I don't come from the carrier side. In fact, my business model is built around sidestepping the carriers. Now, that being said, we would love to bring it back to having a strategic partner or somebody who can provide scope and scale for us. The carriers certainly have done the math, and they realize the more people have value-added services on their phone, the more they're going to use their phone, the more data they're going to consume, the better devices they're going to buy. That's how and so we would love to have the support of a carrier. In terms of downloading a ringtone, I've never done that, so I can't really say.
No. What I was trying to say is this: like, let's say, let's say my carrier is carrier X, and service provider X knows that I've downloaded Billy Joel ringtone. Now you have a relationship with HMV, and let's say you could somehow work out the deal with the carrier. Let's say I have an LBS service. I happen to be walking by HMV, right? Then you could triangulate with the carrier. If you have a relationship with the carrier, that increases the relevance vector of that coupon that comes to my cell phone that says, "Hey, Ron, you're walking by the street, and there's an HMV store right there, and they have they happen to have a Billy Joel."
We approach it from a different angle, in that proximity doesn't necessarily breed relevance. Our offers are relevant because they're there for you to use when you want them. We are a pull marketer as opposed to push. We don't push anything on anybody. Now, there are things that we do to make the app sticky, to make you highly likely to open it every day at lunch when you go out or every time you want to make a purchase decision. Right. But because the way, currently it's a technological limitation too, because we don't run the app in the background, so the GPS is not running in the background, so it doesn't know where we are unless we've opened the app. Similarly, it's the same problem with Bluetooth. We don't. I think the hands-free driving law was the best thing that possibly could have happened to Bluetooth marketing, because only now are people walking around in the streets with their Bluetooth on. So we approach it and I think Bluetooth marketing will probably have a bit of an uptick, but until you walk down the street and your phone starts binging and banging and zinging and whatever, then people will limit that.
So I think some of these questions would be good to take down the street to the pub afterwards.
Okay. Good question, though. Thank you, Ron.
We can do that. I think I want to wrap this up now because we're running out of time, but if we could just give a really big thanks for our awesome panel here today.
I just wanted to give thanks to the four companies that presented as well. It's always really difficult getting up in front of 200 colleagues and VCs and explaining your ideas, so I wanted to give a hand of
absolutely
thanks to those guys. And on the panel front, thanks a lot, Ted. This is year 4 for Ted, so he's been with Alex and myself from the start, and Jolyn as well, so we really appreciate the support. And Matt's been involved as well with the chapter. He was one of the presenters actually with Tira Wireless in year 1, so thank you very much. Randall, you've sat on a couple of different panels and you moderated the October event. That was fantastic, so always appreciate your help. And David, David's a newbie here, so thanks a lot for coming out and providing some good ideas and feedback to everyone that pitched today. And Tom, of course, did a great job moderating the panel. So thanks a lot, everyone, and we'll give you a round of applause. And I think Alex and Jolyn, Alex is really camera shy. He's right over here holding up the vino that he's probably going to drink himself. But Jolyn and Del and Alex, we have some vino for everyone that participated today, so thanks very much.